Hey there, fellow investors. Today we're diving into the world of real estate, a topic close to the hearts of many NRIs. We all know that owning property in India can be a dream, but it's not all sunshine and rainbows. There are challenges like dealing with unscrupulous promoters, legalities, and the hefty upfront capital required. But don't worry, we've got some alternatives that might just make your real estate journey smoother. Have you ever found yourself worrying about the stability of real estate prices, the hassle of property management, amount of money required to invest, or the lack of liquidity when you need it? Well, you're not alone, but here's the good news. Real estate investment trusts or REITs and real estate mutual funds can be game changers for you. Now you might be wondering, what on earth are REITs and how can they make my life easier? REITs are like a magical doorway to real estate investments without the headache of direct ownership. But hold on, we're not done yet. Ever heard of real estate crowdfunding? It's like the Avengers of real estate investing, where a group of like-minded individuals come together, pool their resources, and tackle the real estate market as a team. It's an efficient way to diversify your investments without going all in on a single property. Now you might think, well, that sounds great, but what about the finer details? How do I make sure I'm making the right move? Excellent question. When it comes to real estate, due diligence is crucial. Whether you're considering REITs, mutual funds, or crowdfunding, always do your homework. Check the track record, understand the underlying assets, and make sure they align with your investment goals. Well, what about liquidity? With REITs and mutual funds, you can buy and sell shares just like you would with stocks. It's like having the flexibility of stock markets combined with the stability of real estate. But hey, let's not forget the emotional aspect of owning a piece of your homeland. That's where these investment options shine. You can still have that connection without the headache. It's like having your cake and eating it too. Now here's a thought. Have you ever faced challenges locating that perfect property, verifying title deeds, or dealing with the nitty-gritties of property registration? Yeah, it can be quite a maze out there. But with these alternatives, the headache is minimized. You let the experts handle the heavy lifting and you focus on reaping the benefits. Let's discuss how NRIs can also utilize this investment avenue to explore shopping in real estate space over the next few minutes. First things first, what is real estate crowdfunding? Next step is to find out the types of available real estate crowdfunding options. The third step is to find out how the crowdfunding in real estate works. Fourth point is to understand the benefits of crowdfunding in real estate. The next step is on how does the real estate crowdfunding differ from other investments. Taxation in real estate crowdfunding. Things to be kept in mind while investing in real estate crowdfunding. Now we're delving into the fascinating universe of crowdfunding and how it's shaking up the world of real estate. Now, crowdfunding might sound like a term plucked from the tech cosmos, but trust me, it's a game changer that's impacting everything from new business ideas to community development and beyond. So what's the deal with crowdfunding and why should we care? Well, think of it as this collective power, a financial superhero if you will. It's the process of rallying funds from a bunch of investors, whether it's through online platforms, good old word of mouth, or even lively group discussions. The goal? To break free from the traditional reliance on a handful of big financial players. It's like bringing power to the people. Now let's zoom in on crowdfunding in the real estate space. What's the scoop there? Great question. Over the past decade, crowdfunding has spread its wings into the world of real estate and it's making waves. Why? Because real estate projects demand serious capital and crowdfunding opens the door for anyone interested in real estate to jump into the game. You get to be a partner in a project without needing a big fat wallet. Let's look at an example. Picture this. There's this property in a posh part of Bengaluru worth 4 crores today, but it needs a bit of a makeover. Contemporary amenities, a fresh design, the whole shebang. The savvy promoter does the math and figures that with an additional 3 crores investment for remodeling, the property could soar to a whopping 12 crores in just 5 years. That's a jaw-dropping 72% return on investment. Now, instead of knocking on the bank's door, the promoter decides to turn this into a real estate crowdfunding project. How does that play out? It's like a digital gathering of minds and wallets. The promoter tosses the project onto a crowdfunding platform and everyday folks like you and me can chip in our contribution. It's a win-win. We get to be part of a potentially lucrative real estate venture and the promoter gets the funds needed to transform that property into a gem. But why opt for crowdfunding instead of a traditional bank loan? Crowdfunding offers a more democratic and inclusive approach to investing. It's not just about the money, it's about community, shared goals, and mutual benefits. Plus, for the promoter, it's a way to sidestep the bureaucratic hoops of traditional financing. In a nutshell, crowdfunding in real estate is like a golden ticket for both investors and promoters. It's a chance to be a part of something bigger, to see your contributions turn into tangible results. Let's unlock the secrets of crowdfunding, and guess what? There's more to it than meets the eye. We've got 3 enticing options on the menu, tailored to your return preferences. So let's dive into the crowdfunding smorgasbord. Number 1 is reward-based crowdfunding. What's the catch here? Imagine this, you invest and instead of just a monetary return, the promoter showers you with perks, discounts, exclusive access to the latest gaming software, or even a sneak peek at unreleased music albums. It's like joining a VIP club. Now, if you're someone who wants to dodge the hassle of periodic returns, tax complexities, and all that jazz, this might be your sweet spot. Second is debt-based crowdfunding. Picture this scenario. You want a reliable fixed income, be it periodically or at maturity. That's where debt-based crowdfunding steps in. It's like being a new age lender. The promoter gets a better deal for their commitment, and you, the investor, enjoys a fixed return with minimal risk. Now for the bold and adventurous. In equity-based crowdfunding, your investment doesn't just get you a pat on the back, it makes you a part owner of the project. It's like becoming a business partner without the headache of chasing angel investors or venture capitalists for a chunk of the pie. Your stake could mean a share of the rental income or a piece of the total profit. Plus, if the project skyrockets, your investment could be riding the express train to appreciation town. It's a win-win dance for both the promoter and investor. Now, let's break crowdfunding into 3 key players: the sponsor or promoter, the trustee, and the manager. It's like a real estate symphony with these crucial roles. So, who's the maestro behind the scenes? Enter the sponsor or promoter, the visionary who identifies the golden investment opportunity. They're the deal makers, negotiating and finalizing the purchase, rallying up interested investors through various platforms, and even setting up a special purpose vehicle, an SPV, to bring the project to life. It's like the conductor setting the rhythm for the entire orchestra. Now let's talk about the guardian of compliance, the trustee. The trustee, the unsung hero ensuring everything follows the legislative dance. They're the compliance officer, responsible for verifying and implementing all the legal requirements. Think of them as the guardians of corporate governance and the keepers of all things secure, ensuring the symphony plays within the rules. Last but not the least, who's managing the day-to-day beats? That would be the manager, the one in charge of the daily operations. They're the conductors of the daily real estate opera, handling assets and crowdfunding investments according to the general guidelines set for the project. It's the nitty-gritty work that keeps the show running smoothly. Now let's talk about why real estate crowdfunding is a game changer. Imagine you've got the knack for spotting the next big property goldmine but lack the funds. Enter crowdfunding. It's the bridge to turn your property dreams into reality. And for those of you itching to invest but not wanting the landlord headaches, finding tenants, collection rent, or fixing leaky faucets, becoming a shareholder in a crowdfunding might be your sweet spot. You reap the rewards without the property management headaches. But how does this play out in India? Well, in the Indian real estate crowdfunding waltz, you've got 2 dance partners, the real estate developer and the crowdfunding platform. The platform acts as the matchmaker, connecting developers in need of funds with eager investors searching for opportunities. It's a win-win dance for both sides. And how do you, the investor, fit into this grand real estate production? It's quite simple. You get all the deets about the project, the where, the what, the potential income, and the minimum investment required. Once the funding goal is met, the developer works their magic and you, my friend, start reaping the rewards as per the agreed terms. Whether you're a lender or a shareholder, the profit flows your way. Fourth point is to understand the benefits of crowdfunding in real estate. We are delving into the treasure trove of benefits that real estate crowdfunding brings to the table. So let's break it down and see why this could be beneficial. Ever wished you could invest in property without the headache of property management? With real estate crowdfunding, you get to enjoy the perks of property ownership without the pesky details. It's like having your cake and eating it too. But hey, do you ever find yourself overwhelmed by the idea of managing properties? Wouldn't it be nice to invest without that hassle? That's where crowdfunding steps in. What about the daunting entry barrier of traditional real estate investment? Great point. Traditional real estate can demand a hefty upfront investment, making it a tough nut to crack for many. But with crowdfunding, it's like the velvet rope at the entrance has been lifted. You can waltz in with a lower capital investment. Ever felt like putting all your real estate eggs in one basket is a risky game? Bingo! Crowdfunding offers you the magic word, diversification. Instead of putting all your chips on a single property, you can spread your investments across multiple projects. It's like having a real estate buffet, a little bit of this, a little bit of that. And what about the mysterious world of project details and updates? Crowdfunding platforms lay it all out for you. Every detail of the project is at your fingertips, helping you make informed decisions. No more navigating in the dark. Do you appreciate having all the project details at your disposal when making investment choices? Now let's talk returns. Who doesn't love a good return on investment, right? Crowdfunding projects are like little seeds planted with the potential for high returns. It's like having a secret garden of investment opportunities. Are you drawn to the idea of potentially earning better returns than traditional avenues? And what about the liquidity of your investment? Traditional real estate often ties your money up for the long haul, right? But with crowdfunding, there's an exit strategy. You have the option to liquidate your investment when the right opportunity comes knocking. It's like having a flexible plan that adapts to your needs. Ever wished for better liquidity in your real estate investments? Now, let's do a deep dive into the world of passive real estate investment. You might have heard about peer-to-peer lending, real estate investment trusts, and real estate mutual funds, each with its own flavor. Let's unravel the similarities and differences, shall we? First up, peer-to-peer lending. Ever wondered how it's similar or different from crowdfunding? Picture this. Both are like the cool kids in the passive investment block. In P2P, you play the role of this lender, connecting with borrowers seeking low-cost funding. Now, in crowdfunding, you could wear the hat of a shareholder or even have part ownership, depending on your chosen option. It's like being backstage at a financial concert. Different roles, but same show. Now, let's talk about the world of REITs. REITs are like the cozy, low-risk corner of the real estate investment universe. Here, you get allotted units for your investment, and in return, you receive income as dividends. It's a bit like having a ticket to a show without choosing the performers. Now, in crowdfunding, you get to play director, choosing the type of property you want to invest in, with a better potential for returns, albeit with a slightly higher risk. It's like having a backstage pass to the real estate concert. And let's not forget about real estate mutual funds, REMF. How does it fare in comparison to crowdfunding? The mutual fund maestro. This investment company pools money from investors to dance with companies that own properties, commercial, agricultural, you name it. The goal? Creating value for investors. Now, in the crowdfunding vaults, you're not just a spectator, you're a part of the show. You become a part owner in a specific project. It's like having a starring role in a real estate drama. Remember, in India, we have the permission from SEBI to launch REMFs, but we don't have any funds being launched in this space as yet. Taxes are a part of life. When you earn income, you need to pay taxes. We need to understand how taxation works in real estate crowdfunding. So you've dipped your toes into a crowdfunding project. Great move. But of course, taxes come knocking. First off, the income received from your crowdfunding project, is it tax-free? Not quite. That income is fair game for taxes, my friend. Whether you're an individual taxpayer, part of an association of persons, or even a company, the taxman wants his share. Now, what about the rentals pouring in from the property? A TDS of 10% will take a little chunk out of that sweetness. It's like the government making a cameo in your real estate storyline. And what if you're an NRI venturing into the world of crowdfunding projects? Great question. If you're an NRI and you've decided to join the crowdfunding party, brace yourself. A TDS of 31.2% will be whisked away from your interest income. It's like a tax rate with a touch of international flair. Wait, there's more. The annual income tax return. Yes, the taxman likes an annual rendezvous. You're expected to strut your stuff with an income tax return at the end of the financial year, and if you find yourself overtaxed, don't worry, you can apply for a refund. It's like the grand finale of tax season where you might just snag a standing ovation in the form of a refund. Now let's dig into the essentials you need to investigate before taking the crowdfunding plunge. First things first, how comfortable are you with risk? And where does real estate crowdfunding fit in your asset allocation puzzle? It's like preparing for a grand adventure. Before you embark on the real estate crowdfunding journey, assess your risk appetite. Consider how much of your investment portfolio you want to allocate to this bustling realm. Now let's talk returns. Are they singing the right tune for your risk-return perspective? Evaluate how the returns from real estate crowdfunding harmonize with your risk-return preferences. It's like making sure the music is in sync with your investment dance moves. And what about crowdfunding platforms? How do they stack up against each other? Crowdfunding websites can be like different instruments in an orchestra. Compare them, the type of property they offer, the costs involved, terms and conditions, and any hidden notes in the fine print. It's like making sure the symphony they play aligns with your investment ear. What's the lock-in period, and does it match your investment horizon? Time is of the essence, especially in investments. Check the lock-in period. You wouldn't want your investment to be stuck in a time warp beyond what suits your financial timeline. What about the project details? Are they worth your investment? Dive deep into the project specifics. Check out the experiences of existing investors, like reviews of a movie before you decide to watch it. It's like making sure the storyline is worth your time and money. Now the paperwork. Not the most exciting part, but oh so important. What do you need to cross the T's and dot the I's? Documentation is the backbone. Ensure you have all the necessary papers, especially the taxation documents, more so if you're an NRI. It's like making sure you have your passport before you board the investment plane. Professional backup. It's okay to ask for help. Seek guidance from professionals. It's like having a co-pilot on your investing journey. They can help reassess returns and navigate the taxation landscape. Last but not the least, the regulatory backup. SEBI is like the wise elder in the room. It regulates crowdfunding in India, so it's prudent to check their observations. It's like making sure the party you're attending is legitimate and follows the rules. And there you have it, the grand finale of our real estate crowdfunding journey. It's clear that this avenue isn't just a side street in the world of investing. It's a full-fledged boulevard, especially for our NRI seeking diversification, liquidity, and potentially high returns. But let's not ignore the caution signs on the financial highway. Real estate crowdfunding is like a promising seed just starting to sprout. It brings the perks of traditional real estate without the hefty upfront costs and constant property maintenance. However, let's face it, it's still finding its footing, lacking a robust regulatory mechanism. So what's our parting advice? It's like the final scene of a movie. Make a well-informed decision. Real estate crowdfunding might be the rising star, but tread carefully. Analyze, scrutinize, and be mindful of the risks. While it's an exciting chapter in the book of personal finance, remember, the story is still unfolding.